Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. It's Friday, and then in Vancouver it's sunny, and the sunshine doesn't seem to be illuminating the stock market too much the last couple of days.
Well, we do have some illuminating questions from our listeners. Our first one is from David. Hi, Bob. Really appreciate all your efforts to educate investors. I'm wondering if you have long-term targets for a low on the S&P and NASDAQ Dow based on technicals or market fundamentals. I know you're predicting a big bear market from this bubble. Do you look for targets or just sentiment for lows?
Good question, David. Yeah, first of all, we're finally, what we were looking for at the top sometime around January, so it was in February, close enough, that you would first of all have a loss of momentum, which we did get, and we noted in our publications. Then the next thing is taking out a previous critical low, which seems to be happening now. But once this is broken down, then we might, if there might be enough pattern in there to put on a target, but I think it's going to be, once it breaks and we get the changes in the yield curve, the U.S. dollar going up, and all of the things we need, then we would say it was a bear market, and it would be a cyclical bear market, and would work on some target actual levels at another time. But the main thing, David, as you know, is to get the direction right.
Our question this time comes from Michael. Hello, Jim and Bob. I have two questions for Bob. Article in Zero Hedge reports that we face an imminent convexity disaster in which the Fed loses control over the yield curve, and this may be the black swan that brings down the markets. Bob, what is convexity, and is there anything here to worry about? I've never heard of that word before.
Oh, he's right. Michael, thanks for the question. Convexity, it has to do with the shape of the yield curve, and it's just as easy to say, when short rates are higher than long, it's positive, that's the right way. Usually you get that towards the end of a boom, and then when it goes to steepening, where then short rates are falling faster. So this is where we've been now for the last couple of months. The curve has been steepening, and that's been very favorable to the bank stocks. But it has also been a warning on a change in the credit markets. And what it needs now, and it could be happening in the last couple of days, is a change in credit spreads. And we could be getting that. And the black swan thing, that's for those who are surprised by major developments in the markets. And I contend that in 300 years, all of the major events have not, they may have been surprises to those who haven't done the research, but when you get a change from a fabulous bull market to a contraction, it shows up in the credit spreads, the yield curve. Now, also, you mentioned something about the, did you mention duration, or was that somebody else?
No.
No, that was somebody else. Okay. But anyways, what we have now is we've got the curve has been steepening, which is a longer-term warning on the party. but it helps the banks. And a steepening yield curve helps the banks, and their stocks have gone up until just a couple of days ago. Mm-hmm. But now we're getting an early step in changing to the yield curve, the credit spreads widening, and that then would be the other half of the credit markets messing up, which has been a terrifically speculative market. So, right. Oh, and here's the question, too.
Right.
I understand that in 1929 and 2008, the precious metal sector declined for 6 weeks after the equity markets topped. After 6 weeks, the precious metal sector resumed its uptrend. The overall things. What we can look at now, Michael, is that the gold stocks, which we follow, reached technical excesses last July, and we then advised that both traders and investors should take some money off the table. And our work on the sector it's not right yet time to go back in. But if this is indeed the start of a lengthy post-bubble contraction, the gold sector on the rallies would be expected to outperform the S&P. And this is what we got with the rally until the 1st of August. The GDXJ outperformed the S&P by 2.2 times. So at some point, regular portfolio managers are going to notice that, hey, this is consistently outperforming. So we're watching for the low next buying opportunity in the gold stocks, and we will advise when it comes along.
Elan, who describes themselves as a longtime listener from Toronto, says, "Hi, Bob. The value of all the bitcoins is now around $1 trillion. At some point, if governments try to get control of it, they could destroy it. Can destruction of this wealth take down the market with it? I see high correlation between Bitcoin and the stock market."
Yeah, Alan, you've got it there. There's the correlation. Now, yeah, Bitcoin has been a fabulous, in the real full sense of the word, speculation. And what it exactly is, I don't know whether anybody really knows. And as you point out, it's up to a huge market cap now, $1 trillion. But I'm with you, Ilan. I think that when this big stock market rolls over, it will take the Bitcoin speculation with it.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, a headline that caught your attention. The wealthy are borrowing billions against art collections. So have you got your Van Gogh up for sale yet?
Yeah, no, I have some West Coast native items, steam cedar box and some prints and stuff, but other than the box, it's not expensive stuff, but obviously there's been big games going on in art. I think back in 2000, the Barron's financial publication did have an art index. This question prompts, or the headline prompts, I should look and see if it's still going or if somebody's created some, but obviously people have been bidding up assets and they were considering art pieces as assets, and prices are getting to monumental highs. Even I saw somewhere last year where a painting of a still alive artist was up to something like $25 million. So, and then of course you got the Ferrari GTO, 1963 Ferrari. I think the high price I saw for one of those trading was $58 million. But obviously, for some reason or other, I think the key in the headline is that people are using their art portfolios to leverage up and get the money. Now, whether they're raising the money to buy stocks or raising the money to buy Bitcoin or raising the money because they got debts to pay, I don't know, but it looks like they're borrowing against a high asset price when many asset prices are overpriced.
A friend of mine collects art because you can take it across the border and not have to pay customs duty on it, because the value of an art piece is in the eye of the beholder.
Now,
What may be a $1 million picture to you may be worth only $10 to me, or nothing.
that's interesting. I didn't know about that, Jim.
Oh, yeah. I have actually traveled with him after going to the David Snow Gallery in San Francisco and picking up things like original cell art from the Looney Tunes Orchestra with Bugs Bunny and Yosemite Sam and stuff. It's like 6 feet long, and we actually had to buy an airline seat for it to bring it back to Vancouver.
Oh, that's a choice story.
Yeah. So anyway, that's just, I don't know if those rules are still in place, but they were when we brought the art across the border. We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, lenders are reselling the debt, and it's also been pointing out shrinking hedge funds are exposing piles of illiquid assets. What does that mean? Stuff you can't get rid of?
That's it. I've seen it with fund managers before. They were not huge fund managers, but became specialists and really good at picking small cap stocks. And man, when you've already got a low cost position in them, and the whole street takes off on it, you've got it, and make huge gains on that relative to, say, the S&P. But then the problem is if the market goes against you and you're stuck in small caps. It's just terrible. I've seen it happen with one of our subscribers years ago, a very highly regarded fund manager, and in one cycle he just got trapped in the small caps. So it's small caps become popular in a bull market, and then the trick is getting out of them. So, and that will be a problem over the next while.
If the stock market dam bursts, will commodities go on to a super cycle from here?
Oh, yeah. Gosh, we've seen, Jim, there's guys, the hedge fund guy that made a big killing in 2006 or 2007 when a whole lot of crazy debt went bad, and he made a huge amount being short that. But he's now calling for a Weimar Republic type inflation. And for those who are unfamiliar with the term, in 1922 and 23 in Germany, the central bank did actually go to printing banknotes. And also, I've got them somewhere, there were two well-established economists in Germany at the time who said that when they took the rate of expansion of currency and the rate of expansion of prices and deflated everything and said, but they're not expanding enough. So at any rate, once you're in printing press mode, it gets quite incredible. But I think this hedge fund guy did some research, read somebody's book about it, but there needs to be more done on that. And in the 1920s, Germany had lost a war and was in economic and political distress. And also, with that financial distress, there wasn't much of a money market. But what you're looking at now is that the United States is the senior currency, and New York is the world's financial center. And in order to actually go to printing, you'd have to destroy the credit markets. I mean, kill bonds right down to, disaster, the whole thing, which is impossible to do. And then some of the guys who are calling for inflation now, it's like this Rickard guy. He thinks that, the Fed is being reckless, and this time it's now going to go suddenly into commodities. And no, we look at this as the boom was interrupted by the control freaks putting on the lockdowns because of COVID. And that was extraordinary. But otherwise, you were still in a great financial bubble, which on our count would likely complete in this year. And then also within that count, Jim, you recall that we used the old one where big speculative events have completed in January, like the Nikkei in 1989 and gold and silver in January 23rd of 1980. So this is where we were looking at things. So if this bubble is indeed over, then the pattern has been for 300 years that once the financial bubble is over, then everything deflates. So the street is all excited. But here's the other part that's ironical with it, Jim, is that they somehow think that the Federal Reserve System is uniquely reckless, and it will uniquely trash the U.S. dollar. And do they not realize that every central bank in the whole world is run by the same idiots? So they're all trying the same thing. So you come down then at the end of a great bubble, and the reason why the senior currency strengthens after a bubble is that during the mania, most of the debt gets written in the world's financial center, which is New York. It used to be London. So most of that debt has to be serviced, and that means the debtors have to get their hands on U.S. dollars in order to meet their obligations in New York, and that is both on interest coupon payments as well as when the debt retires in order to pay it off. So this then, the debt bubble, is actually a huge short position in dollars. Now, since early in the year when there was a panic sell on the DX, which got oversold, and then what we've been looking for is a few months of the dollar index establishing a base, which it has been doing, and weakness in the last week kind of brought it down to nicely in the base. And what we look for now is that the dollar rising above the 20-week exponential moving average. And it's got a ways to go, but what is interesting here in the last 2 days of the financial market setback, it's done with an uptick in the dollar index, which is appropriate. So I think the whole hyperinflation story, commodities forever, is in the market, and we have also shown that for the things like lumber, you're getting technical excesses. For copper, definitely. For the base metal index, yes. So there are excesses being accomplished, and the correction maybe have started in these. So, no, we can't endorse the hyperinflation story. The highest probability is that you're going to get a post-bubble contraction, in which case the senior currency becomes chronically strong and most commodities become chronically weak.
I wonder if that means if you're trying to get a loan, if you're an international entity, if you should get your money from the BRICS, Brazil, Russia, India, and China, their consortium, because it wouldn't be in U.S. dollars.
Oh, yeah, I guess so. But yeah, it's going to be very tough to service debt due and payable in U.S. dollars, and this goes way back to the 1550s when Thomas Gresham, who was one of the great traders in history, and he was also financial advisor to Elizabeth I's government, and the money market then was in Antwerp. That was the world's financial capital, and many of the letters by Gresham to Bewley, who was Elizabeth's Chancellor of the Exchequer or financial advisor, he really explains the problem of a weak borrower having to pay their debts into a hard currency like then the Dutch currency was. So it's all been explained for hundreds of years how this works. And so this is the next major problem, if history continues to guide, would be the problem of servicing debt into a rising currency like the U.S. dollar. And all you need is a majority of the debt on the Great Bubble to be contracted in U.S. dollars, due and payable. So it's going to be fascinating to watch. It's going to take apart some some widely held beliefs, and also it's going to be very difficult for the Federal Reserve. The strength in the dollar could prevent them from being reckless, which is going to be fun to watch.
Bob, thank you so much for being on the show.
Well, Jim, it's good to be with you, and I thought someday you were going to have Sean Connery on as one of your guests.
Well, as we know, the great Sean Connery has passed on to the Highlands of Scotland, but we would be glad to have his brother, Shane. Shane could be with us someday.
Very good. Well, I'll be up for that one.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He loves to answer your questions. You can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.